How many times in this crypto cycle have you been praying for one last pump so you can finally cash in on the altcoins you are holding? I speak to investors every week who are still holding 2021 tokens, waiting for them to magically come back, not realizing the liquidity dynamics that actually pumped those coins in the first place no longer exist. This crypto cycle has been completely different from every price cycle. Last cycle, you could throw your money into almost anything and somehow walk away with a clean 2 to 10x. You didn't need deep research, you didn't need timing, you didn't even need a strategy. But this cycle, everything has changed. Being the wrong project at the wrong time can erase easily a year of gains. And many people are still acting like it's 2021, which is why they are round tripping their entire portfolios. Today, I'm going to make it very clear how this cycle is different. I'm also going to highlight key mistakes almost every investor is still making. By the end of this, you'll finally understand why the old playbook is dead and what the winning playbook actually looks like today.
Welcome to Crypto Coach Will, where we bridge the gap for everyday investors wanting to build real wealth in crypto. I'm Will Wright, the founder of Mining Store and Imperial Wealth, two of Australia's leading companies in the crypto space. For over a decade, I've helped everyday investors safely and securely set up in the cryptocurrency market so they can build long-term sustainable wealth. In this podcast, we break down the complexities of the cryptocurrency market, everything from investing, trading, DeFi, and even Bitcoin mining. Let's get into it.
Here are a few reasons why this crypto cycle is completely different from every prior cycle. This cycle is actually being driven by institutional money, whereby the marginal investor or the person actually demanding the products in the market is an institutional investor as opposed to a retail investor that drove all the blow-off tops in the prior cycles. The reason this is because of the ETFs being approved in early 2024. This created the amount of ETF flows that we see in the billions every week. That's created a completely different liquidity dynamic. Here, retail investors are no longer the main force behind the market and hence the best outperforming cryptocurrencies. The volatility patterns are completely different. Narratives within altcoins rotate way faster but with far less explosive tops, and we find investors just flocking and going from every narrative to narrative as fast as you can blink. Institutions don't buy meme coins. They don't buy your vaporware coins. They buy Bitcoin, Ethereum, Solana, and select few other coins that have been established through ETFs and through institutional flows. This alone changes the entire shape of the market. For instance, if you go and look at the retail interest on Google Trends, it hasn't returned anywhere near 2021 levels. Yet Bitcoin has hit new all-time high after new all-time high for this entire cycle. That tells you exactly who is driving this market. Alrighty, so let me explain how this has changed our approach. In this cycle, picking the right projects has become absolutely essential. High conviction, long-term, real utility. We focus on assets that have strong fundamentals, real partners, and staying power. For example, Chainlink and Link is one that on the October 10th dump, we accumulated at $11 using limit orders. Why? Because whether or not the market pulls back or goes through peaks and troughs in the next few years, Link is not going anywhere. It is one of the most important projects in the ecosystem as an oracle that keeps everything together. The risk to reward on a project with proven utility is miles better than chasing a meme coin or an unproven brand new token that might disappear within 6 months. Here are a few of the traps from last cycle that we have personally been avoiding. We stopped chasing random 10 to 100x hype plays. Instead, we focused on new but credible projects that have the backbone to survive the next 4 to 10 years. These can be projects like Hyperliquid, Solana, Chainlink, and more. This shift was one of the most important changes to our entire strategy this cycle. Our approach this cycle actually has 3 layers. Layer 1 is stack Bitcoin and as much Bitcoin as you can.
Just quickly, if you're ready to take your results to the next level, my team at Imperial Wealth Crypto can help. Inside our Crypto Academy, you'll get access to my personal portfolio, strategies, real-time market insights, and the exact plays my team and I use to stay ahead. With our team of analysts monitoring the markets 24/7, we've helped investors catch moves like a coin that's done a 5x in 4 days. If you're serious about accelerating your wealth, click the link below to book in a call with my team of experts and see how we can help. Now, back to the episode.
Everything we ultimately do comes back to increasing our long-term BTC exposure. The second layer is building positions in high conviction altcoins. We build these through dollar cost averaging, timing our supply zones, and entering during heavy fear or narrative rotation dips. The third layer is hitting early stage opportunities and taking profits quickly. We still play high potential new projects, but with discipline. For instance, projects like Asta, which was one that we invested in recently, where we were able to enter early on the day it was released, take profits 5 days later at 5 to 6x, and then we're able to rotate that capital back into BTC, other high conviction long-term altcoin holdings, and also have spare dry powder for future early stage opportunities just like Asta. This is exactly how you grow a portfolio without exposing yourself to catastrophic downsides. When you hit big profits like we did early on with Asta, you take profits. You don't get emotional and you actually rotate those gains into Bitcoin or other high conviction altcoins. That discipline is what actually compounds your wealth cycle after cycle. The reason you cannot successfully do this alone this cycle is because you require the constant filtering out of noise, daily intense research, deep understanding of macro conditions, on-chain analytics, project fundamentals, timing tools, and mentorship and accountability. Even for us doing this full time, it is incredibly demanding. So imagine trying to do this while working full time, raising kids, running a business, or managing a family. It is almost impossible to execute a sound strategy consistently without a team behind you. This is why we deliver all the research, strategy, and updates on a silver platter for our clients. Because without that advantage, most people simply get left behind. So to sum it all up, this cycle is nothing like the previous ones. We have a new marginal buyer in the market that is driving all of the demand, and this is the institutional money which has changed absolutely everything. It's never been more important to pick the right projects at the right time, and this will actually be the life or death of your portfolio. The strategies that you have in place is more important than ever. Our adjusted approach has produced outstanding results. You cannot consistently achieve this alone unless it is your full-time job. If you want last cycle's results, you cannot keep using last cycle's strategy. If you want help building a strategy that removes the guesswork, reach out. This is too important of a cycle to sleepwalk through.
Thanks for tuning in to Crypto Coach Will. If you got value from today's episode, then make sure to subscribe so you never miss the latest tips to navigate the crypto market. If you're ready to take crypto investing to the next level, check out the links below where you can book in a call with my team of experts. We place strong emphasis on educating before investing in the market, so take advantage of the knowledge they have to share. Don't forget to follow us on socials @CryptoCoachWill, and I'll catch you in the next episode.